Before we jump into this episode, I want to invite you to join our community to help you become a better steward, scale to billions, and ultimately give more or all of it away. All I want you to do is to click the subscribe button right now. I love your support. It's incredible to see your comments, and we're just getting started. I can't wait to go on this journey with you. Thank you so much for subscribing. It means the world to me. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more of all of it away to help MVPs. My name is Brett Swartz. I'll be your host today. Each episode, we're joined by some of the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, wisdom, and insight with us so we can all compound and make a bigger impact today. I'm excited about our next guest. He's out of Virginia, and he's the founder of Bonaventure. You can find it at bonaventure.com. And they offer practical strategies for institutional precision with real estate, mostly multifamily investing. For over 25 years, they have forged a distinct path in private real estate investing, guided by long-term vision, entrepreneurial agility, and institutional grade execution. Excellent track record. I'm excited to have Mr. Dwight Dunton on the show. Dwight, how are you doing?
I'm great, Brett. Thanks for having me. I'm excited for our little conversation.
Excellent. And for our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Oh, yeah. I started this business 25 years ago to help our family continue building wealth through investing in multifamily real estate. And over that last 25 years, we've built a business to help hundreds of families build wealth to afford their long-term dreams, whatever those are. And we do it through the lens of housing policy is broken in the United States, and as the economy cycles, there's always an opportunity to make money, and we've been doing this for 25 years, and we're the largest investor in our program, and we look at not how much you make, but how much you keep, and we have a real focus on after-tax returns.
Excellent. Fantastic. And again, people learn more about Dwight by going to their website, bonaventure.com. So great track record. It looks like $2.8 billion in assets under management, $590 million plus of capital invested, 9,000 units, average IRR of 24% and such, 36 full cycle events. What's been the most surprising thing in the last 12 to 24 months, given your track record for 25 years in the multifamily space?
Yeah. I'd say the most surprising thing is retail investors get their news from the Wall Street Journal, which is 9 months behind the curve. And so there was an overbuilding in Sunbelt markets that led to negative NOI growth. But there's lots of other markets where there wasn't overbuilding and NOIs have continued to march ahead. And so, people miss the bottom a little bit because they are reading just generic business publications, but it's been a pound the table opportunity in multifamily and senior housing for about 2 years.
Excellent. What markets are you finding that to be the most prevalent?
Yeah. So what we found is the number one predictor of cash flow growth in NOI is lack of supply. And so there's, headlines are about the dynamic job growth of new companies moving from economically regulatory constrained markets to more free markets, but also a ton of capital went there. So if you were in Charlotte, Austin, Nashville, great places to live, lots of job growth, but even more supply growth. But if you move to Norfolk, Virginia, there hasn't been quite as much job growth, but there's been virtually no supply growth. And so our NOIs in those secondary markets that maybe aren't on everyone's radar have been marching ahead, while some of those markets I mentioned earlier, they've gotten clobbered.
Got it. So the key metric here is really supply. And
yeah.
If you can really just, and job was maybe the growth and, the sexy moves from California to Tennessee to Texas to Florida and North Carolina. And you're saying, okay, yeah, that was cool when things were red hot, but, a decent, still a good indicator, of course. But what you're saying is the key, if we can, performance indicator really we're looking at here is supply, lack of it. And so places like Virginia, any other places that stick out for you like that?
Yeah, there are lots of markets in the Carolinas.
So if you like this little short clip of the interview I just did, click over here to watch the full interview. And please don't forget to subscribe Thanks so much, everybody.